Hello, everyone. Welcome back. My name is Michaela. I'm part of the Binance Institutional and VIP team, and as usual, I will be the host for today. A quick disclaimer before we start: digital assets are subjected to higher market risk and price volatility. This means that the value of your investment might go up as well as down, and you might not get back the amount you invested. You are solely responsible for your investment decisions, and please remember that the conversations taking place here today do not constitute an investment advice of any kind. That being said, welcome to another episode of Binance VIP Voices, a space where we will be delving deep into the minds of the biggest institutional players in the space and clients and partners of Binance. Our podcast covers quite a variety of topics in the world of digital assets, such as institutional adoption, institutional trading strategies, crypto asset management, and a lot more. It's my pleasure to jump directly into this episode and introducing a professional that has been in the space for over 7 years. He's currently overseeing all the market making relationship of Keyrock globally. Welcome to VIP Voices, Stef.
Thank you, Michaela. Thanks for having me.
It's a pleasure to have you, and on behalf of Binance VIP and Institutional, welcome. Steph, could you take a moment to provide the audience with some insights, of course, into who you are, what you do, and what Keyrock does in the space?
Yeah, sure. Myself, I oversee all of our market maker relations at Keyrock. Market making being the core business of Keyrock, being a digital asset market maker. It's quite an exciting role to be, connected with a wide variety of not only foundations, but also exchanges across the world. A bit more about Keyrock. So Keyrock has been around since 2017, and we've been solely focused on providing liquidity services and market making service for a wide variety of exchanges, token foundations, institutional counterparties in crypto. We're founded based out of Belgium, and quickly over the years grew to a team of about 180 people globally. Obviously, a great partner of Binance. I think started with spot market making, but have evolved down the line, to a full suite of liquidity services. Spot derivatives and institutional liquidity with our OTC desk and OTC options desk. So it's been quite the journey, it's been great to be an active participant, but also a driver for innovation in this space. So happy to dive into the concept of market making, because often people don't really understand, what market making is or liquidity as a concept is. So hopefully today, lots of questions will be answered.
It's a very much pleasure to have you, and as part of one of our most valued clients. I do think that today is going to be key for many people to understand what is market making and what companies like Hero does in the space. This has been a pretty anticipated episode, I will say. Let's jump into the first question, right? The first one will be an eye-opening. What are the main differences between crypto and TradFi market makers, and how those differences impact market dynamics?
Yeah, no, it's a great question, and we get that question. We get that often. In the end of the day, there's more similarities and actual differences, but the differences are quite significant. Taking a step back, as a market maker, we provide prices on both sides of the books. Are always in a buyer and a seller of assets, and the concept of market making is that you provide liquidity so that people can interact freely on financial markets. The purpose is to do that, as tight as possible, with 100% of the time, with as much liquidity as possible for any type of counterparty to interact with. In the end of the day, there's lots of algorithmic and technological involvement needed for that, to be able to do that. Now, it's pretty similar in crypto as in TradFi. Now, what the main differences are, though, and they are quite, significant, let's say so, is that first of all, the market structure is rather different, right? In crypto, you have a diverse range of centralized and decentralized exchange platforms. You have a wide variety of custodians. You have a wide variety of counterparties. While in traditional finance, that has a more structured, more matured setup, which is first of all exciting, but secondly also rather challenging. If you think about trading, crypto is 24/7. I think we all realize that. So as a market maker in crypto, you need to really make sure that you not only structure your team accordingly, but also have a high level of technical maintenance in order to be able to do that. In TradFi, you're going to have dedicated trading hours. In crypto, it's quite different. given the fact that there's so many, let's say, entities interacting in the markets. In crypto, counterparty risk is also different. You need to take into account, the interactions that with a wide variety of exchanges. I mean, we're integrated about 85 of them, and that has their complexities. The same applies to custodians, lending desk, etc. Which requires not only constant due diligence but also the right, risk mitigation systems in place in order to manage those counterparty risks accordingly. While maybe in TradFi, there's a bit more, let's say, more structure on that front, and a little more, safeguards. At the end of the day, what's also beautiful about this industry is that blockchain as a concept allows a lot of transparency on what your actions are, and not only on your settlement layers but also your smart contract interactions. And although that is a beautiful concept, it also makes things a bit more complex as a market maker, because you're continuously interacting in the market and you're an entity that often is also followed. So making sure that you are well aware of these type of interactions, and that you also make sure that you adapt your technology set towards that, is going to be key. And I think maybe one last note, the beauty of the industry is that it has given a lot of, the barrier to entry for a sophisticated player to interact in this space, and that can be, as a market maker, or it can be as a trader, or it can be as an investor, is way lower than it is in traditional finance. I mean, I think that's one of the amazing parts. Everybody can, create an account on an exchange and interact through an order book, which is not the case you can do in traditional finance. So as a market maker, the fact that there's, quite a variety of open source technologies, and there's lots of composability when it comes to technologies, and the barrier to entry is so low, you need to take that into account, and make sure that you continuously evolve, continuously innovate, and not just stay flat, because that's when you start losing, your competitive edge, but also your service that you bring to the market. So I think those differences are quite apparent, and are very impactful, although there's lots of similarities, which is making prices and making sure that liquidity is there.
Now that you mentioned price and of course the level of sophistication that currently Keyrock has, what is the role of market makers in reducing price volatility, and how do you use the sophistication of your systems in order to ensure such?
Yeah, so in the end of the day, if you think about volatility, it is a movement of price, and it often comes with the fact that there is more demand than supply, or there's more supply than demand. So in the end of the day, when volatility arises because of lack of liquidity, the sole purpose of a market maker is just not to be there for a few dollars here and there, but is actually to showcase a liquidity profile that is adapted to each and every counterparty. This being, people that are actively trading, people that are actively investing, or people that are sporadically investing, but also institutional flow. So for us, the impact that we have by posting liquidity is that actually volatility goes down, and that the access for people to interact with any size is being met, which is ultimately resulting in lower volatility. So the role of a market player is actually rather significant on that front. Now, in order to be able to post a lot of liquidity in the book, you need to realize that if everybody wants to sell or everyone wants to buy, it is a market maker who is selling that asset to you or buying from you, right? So which is obviously a risk that a market maker takes. So what market makers typically do is they connect with a wide variety of major exchanges, both centralized as decentralized, in order to construct the optimal mid price of an asset, taking away, for example, arbitrage, etc., but also having to connect with a wide variety of derivative products in order to hedge those positions. And whenever they have to take that risk of being a buyer and seller, when everyone's a buy or sell, they can manage that accordingly. So if you are a sophisticated entity and you've got that covered, which obviously requires a lot of technical work and a lot of algorithmic work and pricing work, that can really result into lower volatility of an asset, which creates more trust. I think often I get asked, okay, crypto is very volatile, and that is one of the main reasons why people don't interact. And I think that is partially true, Now, volatility, what it also does is, when price goes up, unfortunately or fortunately, it does attract a lot of attention, and it attracts, entrance to markets. When price goes down, it it generates quality in the markets. But if you can make that process, you know, um, less aggressive, trust gets enhanced into the space, and you will acquire, let's say, more long-term, let's say, interactors, or more long-term participants, which is ultimately the sole purpose of, or at least the sole outcome, or one of the most important outcomes of a market maker, is to facilitate the adoption of this technology.
And now, in terms of token market making and how you facilitate the best possible services for them, we would like to understand, first of all, what is market making for projects for the ones that do not know, and secondly, which are the major challenges that you face when trying to set up market making for projects in the space.
Yeah, so the interactions that we have, or the conversation they have with token issuers, is that we are there to help them facilitate the adoption of the token, right? For people to invest, or people to buy that assets in order to interact into the economies that they're building. Um, so for that, you need to first of all explain very clearly what the concept of liquidity is, but you need to really, really understand what the ultimate purpose is of a token issuer with that asset. Which means that you need to not only educate, right? Because a lot of the people that we speak to are entrepreneurs. They're very tech focused, maybe with not the financial background to first of all understand liquidity, but also to understand maybe market making. So there is a big education portion when it comes to these interactions, which is obviously great, but it requires also a lot of responsibility for a market maker to educate them with the right, let's say, the right insights. And then you have to make sure that that matches also the expectations of a founder. Often the concept of market making is misunderstood, and is very, let's say, price focused, which is not at all the responsibility of a market maker. It is there to be, delta neutral and to provide liquidity. And as such, the education cycle is often, very important and takes time. I think secondly, from a market maker's perspective, you need to be very well aware of the tokenomics. You need to be very well aware on what the use cases of a token within the go-to-market strategy of these token foundations. And you need to make sure that you are, as such, adapting your liquidity profiles toward that, because it needs to meet the requirements of the markets. If you don't do so, as a market maker, it's going to become a tough exercise. And then thirdly, you need to be excited about the technological innovation that they are bringing, but also the technical requirements that are needed to be, or in order to be a really good service provider, right? So if you think about, the evolution of EVM chains, that makes it easier because there's lots of similarities in when it comes to interacting on chain. But when you're looking really at new layer ones or layer twos, you need to make sure that as a market maker, you're also very much connected with your counterparties when it comes to technological advancements and technological innovations. So I think the combination of these three things are typically how we interact, with the sole purpose of facilitating adoption, right? We do not have any incentive on a price going up or down. We're there to facilitate adoption with liquidity that is adapted towards the needs of the market, which relate to the tokenomics and go-to-market strategy of our partners.
I would like to extend on one point you mentioned, which is evolution. And if there is a company that can speak about this, it's definitely Keyrock, because of experience and how much you guys have grown in the last few months. How is market making different in DeFi and CeFi? How has Keyrock adapted, right, to the new trend, in this case, DeFi? And what are the differences in the way those two markets are impacting your operational models?
Yeah. Yeah, when you think about CeFi, there's lots of similarities with traditional finance, right? You're interacting on a central limit order book, where the custody is being provided by an external party, etc. And the similarities that you've seen maybe in tradfi do help being, a competitive actor on that front. Now, with the emergence of DeFi, that all of a sudden completely shifted, because the, say, discovery phase of liquidity on DeFi is completely different than it is on CeFi. right? In DeFi, you're talking about liquidity pools, for example, or think about AMM models. You're thinking about, RFQ systems, etc. And as such, price discovery has a completely different profile than it has on a centralized limit order book. And if you think about Keyrock, I still remember, 2018. That's when we started to interact with radar relay on 0x, etc. We actually integrated airswap at the time, and the pains of DeFi were very apparent at the time. And although it was a big learning, it also came along with lots of, let's say, slight frustrations, but also learnings of where the bottlenecks are, etc. While that then evolved into 2020 with DeFi Summer, which I'm sure lots of people here that are listening enjoyed or participated in, really came with that massive wave of innovation. And as a market maker, you need to adapt towards that. So today we are an active participant. We've been creating a wide variety of specific strategies and algorithms in order to just to be an active participant, and actually not just be an active participant, but also to be a driver of innovation. So we're very excited to learn more. We're very excited to speak with founders that are building innovative concepts when it comes to DeFi. But it requires a completely different setup, and that's actually also the beauty of this industry, and also the reason why market makers in crypto are really actually really good at making prices.
Excellent. And what about the demand on in DeFi specifically? Do you see many competitors in the DeFi space, or if we compare
More
it
and
with,
more,
yeah,
more and more, and I think it's funny. I don't really like to use the word competitors in this industry, because we're getting to a point where this industry is growing so fast. So the colleagues in the space make each other better. So I think it's good to call it friendly competition, etc. But yeah, more and more, and it's good. Today we're getting to a point where DeFi is an option. DeFi gives the possibilities for not only let's say people that experiment to interact, but also for big institutions to play a role. And as such, it requires way more liquidity needs than just one entity can bring. And it's good to see a wide variety of actors participating. In the end of the day, friendly competition between market makers benefits the whole market. Spreads tight, and there's more liquidity, there's more uptime, and you're going to see the same more and more in DeFi. So it's something that I really welcome, actually.
in in this point of friendly competition, right? We have seen, all of us have seen the rise of market makers. Every month you see a new one emerging. And what do you think, based on your 7 years of experience here, what differentiates the great from the good in terms of market making?
Yeah. The definition of market making is often used in crypto, or market makers, right? as they call on crypto Twitter. And unfortunately, the reputation of an isn't always that positive for some reason. And it's a very important thing is that we need to make a difference between a dedicated market maker that is there to provide a service, and a more directional entity that is leveraging market making algorithms to generate alpha, not only towards their LPs or possibly towards themselves as a prop shop. So a great market maker is actually an entity that has the capacity to not only provide a service, but also have a business model that runs in a linear growth line with delta neutrality in mind. And with delta neutrality, I mean not having an incentive of a price going up or down. And in order to be able to do that, while respecting SLAs that are built around uptime, outstanding liquidity, spreads, and have a risk profile in place that actually manage all these things accordingly and have a holistic global approach to risk, is a very tough setup. And there's many market makers that are extremely good at maybe specific assets or a specific product that can be spot, can be derivatives, etc. But in order, especially with the market we're in right now, which with a lot of the challenges but also the opportunities there are, so in order to be able to do that with the right risk controls in place and actually provide a service under specific SLAs, it's a very tough one, right? And I think the ones that are around have been around for more than 5 years, are typically very good, and it's good to see more and more of these entities build out their teams and still be around after lots of years of volatility and counterparty risk management, etc. and actually provide a service. And I think those are the great ones.
What do you think it has made Keyrock so good in the last few months? What has collaborated to the growth that your team has had?
Well, I think when we started Keyrock, it was with a big vision. It still is actually is to be able to provide liquidity services at scale. And what I mean by at scale is in 2017, with the whole ICO craze, we started to realize that tokenizing an asset makes an asset tradable, but actually doesn't make it liquid. So if you are a market maker that wants to be able to provide that service to a wide variety of assets, and we truly believe that any assets down the line will be digital, by the way, but if you want to be able to offer that service to a wide variety of different assets, you need to be able to build your company from the ground up with scalability in mind. And the fact that we realized that early on as one of the major factors for us to be able to scale was very important. We've been on the very much boring side of things when it comes to directionality and counterparty risk, which has given us the capacity to, survive a lot of the pitfalls that there might have been in the space, which has been, a really good one for us, over the years. And yeah, I think we've had that service-driven approach always in mind. We share a lot of transparency about our activities, both on and off chain. And I think the combination of these things have made us quite a trusted partner in the industry. It gave us a lot of learnings as well. And I think today that is a source of our success. We look forward to the future, right? I think today we have the capacity to price risk accordingly and to be good at pricing assets. Now with the OTC desk, our options desk, with our on-chain governance models, etc. I think more and more of that USP that we created over time will be able to be valued by a wide variety of counterparties. And I think that's going to be the success of our growth in the future. So yeah, with being a bit humble, I think us being on the careful, boring side of things and being tech focused from the get-go is the reason why we've grown to a team of that size today.
And it's an evident growth, to be honest. So congratulations to you and your whole team. Stef, now let's go deeper into the challenges, right? You mentioned some challenges, and it's not a secret that for all of us last year and this year was really hard, right? A lot of waves in the industry. Could you elaborate a little bit more on the unique challenges that crypto market makers will be facing in the months and year ahead, and how specifically are market makers preparing themselves in response to those emerging challenges?
Yeah. So I'd like to split up probably this question in a few different topics. And I think the first one is the way that we're going to collaborate with counterparties in the industry is going to become more holistic. People are not just accepting, market making as a service. They're going to be looking at, a wide variety of services and products for them to meet their liquidity needs. And this goes from treasury management to derivatives, to OTC exposure, to on-chain governance, to being an active participant on chain. So I think the holistic approach to the requirements is becoming more of a challenge, but an exciting one actually. So from a commercial perspective, I think the market makers need to prepare themselves accordingly. And yeah, it's going to become more on chain, right? I think that's from a technical perspective one of the biggest challenges. I think we're seeing a movement of the flow towards on-chain applications. And as such, you need to prepare yourself accordingly as a market maker, which means that as a team, you need to be able to offer the products that are, let's say, rather common in traditional finance, together with the technological innovation that you're seeing from a crypto native target audience, which means that attracting talent is essential. So, that's the way that the majority of market makers are preparing themselves, is to be able to really pinpoint what type of talent that they need in order to, walk the talk on that front. And that's going to be key. So you need to be very strong on the technical side, but also very, strong on the financial side of things because of the requirements that, most of our counterparties are having today. So I think that's the main challenge, and I think the third one is maybe not per se a challenge, but also an opportunity, and is regulatory clarity is something that we welcome, but it also, especially because there's a wide variety of jurisdictions globally that we're active in, it also is very important for us to prepare ourselves in the right way and to actually be at the table as fast as we can with regulators. Whenever there's clarity, we want to be able to be the first to have the license to be able to offer our services. I briefly mentioned that we believe that any asset is going to be digital one day, which means that we're going to be an active participant with tokenized securities, for which you need to be able to have the right licenses. And as a global company, there's lots of fragmentation when it comes to, regulatory initiatives, and a market maker that inherently has global activities is going to be needed to prepare themselves for that. So, it requires a lot of legal team investments, compliance team investments, etc. And it all starts with people. At the end of the day, market making is a people's business. All these technologies that we create is created by developers, and those are people.
I would like to double down on one trend you mentioned, which will be more focused on on-chain activity. Um, if we speak about trends, there is also a very huge trend of more VC arms inside market makers, right? So, what role does those market makers play right now as a venture partner? And you can speak, of course, from the experience of Keyrock.
Yeah, no, great question. Because what's important to mention here is again, I think one of the previous points that I touched upon is, you know, when you think about a market maker, you should be expecting neutrality. If you then see that they have a venture arm and actually invest into the space, they're actually long. They have a direction. So for a market maker to be able to split these two responsibilities is actually very important. We've been working on this over the last, let's say, year and a half, and we've taken the approach of actually looking at VC investments more as corporate development. And with corporate development, I mean, we are not a venture, we're not a VC, right? We do make investments, but we do this with two, let's say, investment theses. The first one is this technology exciting for us as a user, for us to build prototypes for? Does it, give us the capacity to work on capital efficiencies? Does it give us the capacity to price assets better? Does it open up a new asset class, for example? That's the first one. The second one is, will we become a power user? And that's absolutely essential, because if you think about investment today, you've got VCs that are specialized in being a money allocator. But what's often missed is actually participants from day one. And when it comes to liquidity, it's often a chicken and the egg story, right? You're not going to attract liquidity or adoption unless there's liquidity, and vice versa. So as a market maker, we have the approach of being a small strategic follower with the premise of actually building a prototype and becoming your power user. And I think we should call it more corporate development than actually venture capital. And I think it aligns the incentives really well, and it gives us the capacity to remain, again, neutral without being a long-only entity that is trying to make a buck on their investments. And I think that's a trend that I welcome a lot, that I hope will only grow with other entities in the space. And I'm sure this will also be appreciated by lots of other investors and also lots of participants in applications that got VC investment from market makers.
And it's interesting that you guys are develop this initiative right now and those market conditions. So you probably think that in the next few months, if market conditions change, probably this is going to be one of your main arms, right? If that's how
Yeah,
you.
I mean, I think we remain, diligent. It's not for us to want to try to invest in as much as possible, because we have a bottleneck, which is technological development, right? So we need to choose our battles, and we need to be, thoroughly excited about what our partners are building. But the beauty of this is that if indeed the market picks up and there is more and more interaction, and the technology sets becomes, something that's going to help us become better, everybody will benefit from it. So, we can't wait for the market to pick up in a way, and it's going to be a great journey that we're able to hopefully share with quite a lot of partners on that front. But again, we need to be, again, we're not a professional investment firm. We are a professional trading and technology firm, and we need to remain that actor.
No, thank you for making that emphasis. Apart from those two, right, on chain and now your new arm, what are the trends that you're excited about? Apart from those two, any other trends that you would like to share with us?
Yeah, I think, when if you think about a market maker, we're always going to be looking at what can be the best use of the capital that we manage, right? Because that way, we can provide, the best services we can. And for that, we've seen a lot of, let's say, challenges on that front, being able to, work to capital efficiencies by going to credit markets, both on and off chain. Now what we're seeing is a big trend when it comes to, uh, interchain communication. So this means we are, as also Vitalik said, we're entering into a multi-chain world. So in order for us to be able to communicate effectively between different blockchains without having to rely on a centralized, um, let's say, bottlenecks, is an exciting trend that we're seeing in the space that we're very much interested in. I think that's definitely one of the exciting, evolutions. I think real world assets remain great, but I think that's what lots of people are excited about, which is good to see. And a third one, and is actually, we got a small team working on this, is we've gone through the whole NFT craze, and although it was a great experimentation of, tokenized value, I think we are getting to see more and more solid infrastructure for it, and even looking at derivative markets, etc. But we I think we underestimate still how exciting the NFT landscape is, and what value it can bring down the line when it comes to, you know um, tokenized IP. So that's something that we're very much working on how we can be a service provider there, and actually an LP. Besides the fact that I'm a huge NFT gen art enthusiast, that's my weak spot. So it's great to be able to work on that with the team as well.
No one could have imagined, right?
Yeah.
Great, Steph. We now have two questions from the public. I'm trying to screen those as fast as I can. We're getting quite a few from Binance Live and YouTube. And the first question is, what role does market maker play in governance, and specifically Keyrock? Does that have a specific role within your operational model?
Yeah, it does actually. We got from our team Thanos, who is our Web3 governance lead, who has been doing actually an amazing job in participating. It's very important to us. I think, for multiple reasons. I think we are extremely excited about how DAOs are evolving. Obviously, it has their challenges, but DAOs are a beautiful governance model, and especially you're seeing the quality emerge, in this, let's say, cycle of the market. Now, as a market maker, because we are so interconnected with a wide variety of counterparties and actors in this space, we tend to be a power user of a lot of the technology sets and a lot of the applications, and also we, discover lots of bottlenecks or lots of learnings that might actually have a lot of use cases when it comes to sharing that knowledge. So we are an active participant in governance fora, and actually also commenting and voting, because we want to share that, and also because we want to learn, and we want to participate in ecosystems that we really are excited about as a participant, and actually as a value driver. So for us, it is a growing business, or business is a growing team, actually. So Thanos is building that out, and we can't wait to expand our reach on that front as well, just because we are so interconnected in the ecosystem, and we learn that much.
Yep, yep. That will be a whole new episode. What about the whole how you guys work with the whole ecosystem? I think that deserves an episode as a whole. My next question will be the differences between token market making and exchange market making. That's come from the public as well. Many people think that it's just one type. Could you quickly define the two?
No, it's pretty similar. Besides the fact that with token market making, it's a bit, let's say, more challenging because the scope is wider. Token market making applies to both on and off chain service provision, plus typically on early stage tokens, the capacity to hedge your positions by either other liquidity, let's say, sources being listed on other exchange, or derivative products is more complex, which means you're way more focused on service levels, you're way more focused on managing risk accordingly, and also the amount of insights that you share when it comes to your performance, etc., is more, even more detailed than it is on the exchange side. On the exchange side, you typically are there to not only help from a liquidity perspective, but you're also a partner when it comes to technological setup. So we've become experts at API integrations, etc. We've become experts at capital management, settlement times, etc. So you also are a partner on providing insights. And actually, also by being an active participant on the exchange, you also provide value to the exchange itself, right? It's a very symbiotic setup. Also, what you do on the exchange side of things is you don't have any contractual relationship with the assets that you trade, right? We trade Bitcoin, we trade Ethereum, for example, and that we do for exchanges. And we do this not only against crypto, but also against fiat, which means that you have to have solid setups on the banking side of things, which typically is different with token market making, which is, I mean, it is a case that it's traded against fiat, but it's more apparent with exchanges. So it requires, let's say, a more institutional approach in the exchange sides and a more service, let's say, holistic on-chain, off-chain approach with token issuers.
Thank you. So it's a great explanation, great way to put the differences. And I think that before we wrap up, we can entertain one more question from the public. I thought it was going to be a soft one, but it's actually quite a technical one. Could you explain the key differences, or let's say like these strategies that market makers use to maintain liquidity and price stability in the crypto markets? And I think that this user is specifically referring to the trading strategies that you might use. I'm not sure if you're able to disclose that, but if you can probably delve into the very superficial level, that would be great.
Yeah, sure. So yeah, as I mentioned, we're delta neutral, and our aim is to be, always a buyer and a seller. So making sure that there's a bid offer spread, which means you have to be on both sides of the book. So depending on the maturity of the assets, there's different strategies that we deploy, and this can be, stat arb to arbitrage between specific venues, because there's mispricing, and as such, we want to make sure that the pricing across venues is stable, but also being an active participant on liquidity pools, and being posting liquidity within ranges on DeFi might be one of that as well. In addition to that, it's making sure that you always get back to balance, which means you need to do lots and solid risk management, which derivative products might help. The other part of it is that you need to think about capital management. So you can work together with exchanges on the margin side of things to post collateral in, for example, stable coins, to then to be able to trade a wide variety of assets. You're going to be looking at the correlation between those assets in order to manage risk accordingly, right? Because at the end of the day, it's not because a market maker is long on an asset that he might not be, let's say, short on another asset, and that doesn't mean they have a directional, let's say, preference towards that asset. It means that their overall portfolio as a company is net zero when it comes to long or shorts, right? So I think that's typically from a helicopter overview, the strategies that we work with. So ARB, stat ARB, derivatives trading, margin trading, in order to looking at correlation between assets to then become a performance delta neutral entity. FX markets, we leverage a lot of the FX markets in order for us to be both on euro, US dollar, JPY, Swiss franc, etc., to be again neutral on that front. And I think that's about it.
Great overview, and we appreciated that. I do think that time is quite constrained, and we have so many great questions, but that will be for another episode. Unfortunately, we do need to wrap up. But Stef, before we bid farewell, could you please share your social media details with our viewers and maybe some final remarks?
Yeah, no, great. You can connect with me on Twitter. You can connect with Keyrock on Twitter. So Keyrock is Keyrock Trading, and my Twitter is Stef Wynendaele. If you want to talk about Gen Arts. My alter ego is guanaco.eth, so feel free to reach out to them if you want to talk to talk NFTs. I think one last remark is it's been great to be able to share the story of market making, maybe from a different approach than some might perceive. Market makers are an important actor in the space, and ultimately there to provide liquidity. And in all honesty, liquidity should be a public good because it's only a win-win. Let's say win-win situation. But the responsibility of a market maker is great in this industry, and I look forward to further education and also trying to be the, let's say, the ever servicing entity out there. Although that sounds maybe a bit fluffy, it actually is what we mean. And so can't wait to have also questions sent to my profile or in comments. I'll try to answer as many as possible then today. But no, thanks for having me and giving me the opportunity to talk about Keyrock and market making.
Absolutely, and we're very sure that you're gonna get a lot of DMs after you said the NFT word. You're probably gonna have quite a few. Steph, thank you. Your insights and wisdom have provided us with health, wealth of knowledge and revelations, and we do appreciate you being here. I'm sure this is not gonna be the last episode that we are gonna do together. And again, once again, on behalf of Binance Institutional, we are grateful for you to come here with us. Keyrock is one of our main partners, and we hopefully continue to be. Thank you so much.
Thank you very much.
Excellent. Well, as usual, we are receiving quite an influx of inquiries from users seeking guidance on the application process for Binance VIP and institutional. Just to have a quick wrap up, before anyone leaves this live, just make sure you connect with us. Feel free to send us a Telegram message or email us at Binance VIP or vip@binance.com. The email is at the screen right now. You only need to scan the barcode and you will be redirected to us, or email us, and you will be giving all the details to be part of our VIP programs. We have 4 programs at the moment. We can give you all the info after you ping us on Telegram or email. Don't forget that we are working daily with market makers, automated market makers, FX brokers, quants, algo traders, OTC desk, hedge funds, high frequency trading firms, fintech, prop firms, and more. If you enjoy this episode, please make sure you mention us on social media and don't miss our latest updates. We are going to keep doing those amazing episodes and bringing great speakers like Steph. Thank you so much and see you next time.